Hello there, Maverick Traders. This is Rob Reinhold, and check it out. August is over, going into September, and that is football season. This week we sent out invitations to the 11th annual Maverick Fantasy Football Tournament. If you want to join, click on the link. If you don't care about it, just ignore it. Just ignore it and let us pretend like we are, big time coaches and putting these teams together. I told my wife about this years ago, and I told her about how it all worked. And she's like, "Oh, so you mean it's just Dungeons and Dragons for jocks?" And I laughed so hard because she nailed it. So, if you want to come play Dungeons and Dragons for jocks, then fantasy football is for you. If not, let's get into trading. In this session, we're going to go through what happened this week. We're going to go through some of the news. We're going to score all the sectors from +3 to -3, and then we're going to identify the best and worst trades in those sectors, and those are going to be our target trades for the week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, so last week we saw markets basically just high base. We've got the SPX right at all-time highs. We're going to take a look at the equal-weighted S&P and see how that's doing. But there's no question that the Qs have lagged substantially. They've lagged on the way down in July. They've lagged on the way up. And this week, we actually had a very, very important earnings report from NVIDIA. And there was this huge expectation built into the market. I believe the options market was looking at like a $14 move, so like a 12% move up or down. The report came out, and the stock really didn't go anywhere. It drifted down a little bit, but when you take a look at how volatile NVIDIA really is, or usually is, and you took a look at this report, this was clearly a win for short volatility traders. Just really hung in right where it was. Then we also got a report that second quarter GDP was revised higher. One of the things that people were worried about, literally just a month ago, at the end of July, we were like plunging, worried about economic growth. 3% GDP, that is a really, really strong market. And if we take a look at some of the other reports we got, durable goods orders up 10%. Now, yes, the core, stripping out some things that are more volatile, it dropped a little bit. But when you take a look at some of these numbers, again, everything was just better than expected. Consumer confidence better than expected. Home prices continue to rise. Again, we talked about this GDP number that's better. On Friday, we got the core PCE price index. This is the Fed's favorite inflation measure. It came in perfectly, absolutely perfectly, not too hot, not too cold. The market really liked it, and we ended up having a pretty nice close on Friday's rally. So if we take a look at the final numbers of the week, the final numbers of the week said that the Dow up about 1%, S&P up 0.25%. Take a look, the Qs were down for the week along with the Russell 2000. We saw oil and gold also drop. This was really a week where we've just consolidated gains. And if we take a look at the S&P 500 chart, you can see we are just basing here. All-time highs are up here right around 56.60. We had a huge, massive rally off of the big fall. Typically, we see basing for about the same amount of time. So if I'm counting candles here, I see 12 candles from the bottom up to the top. And if I'm counting these here, I'm seeing 9 candles here. Again, there's no certain rule that anything has to do anything that's done in the past, so I'm just giving you general ideas. We had a 12-day rally followed by 9 days of consolidation. We're getting close to where we could see a breakout. Now, this is the S&P 500. The S&P 500 is a market-weighted average, meaning the bigger a company is, the larger an effect it has on it. Over the past year, We've had Microsoft, Apple, Nvidia, Tesla, Amazon, Google. They've ballooned in market value. What if we actually took that out? What if we looked at the equal weighted S&P 500, where every single one of the 500 stocks has equal weighting? It's already broken out. It broke out last week. Had a tiny little pullback this week, and it is now closing at all-time highs and closing at the high. If you take a look at where the market is, the quote average stock, the normal average company is at new all-time highs. But you take a look at like the Qs, check out the Qs. This is where all of the underperformance is, right here. The average stock has already broken out to new all-time highs. It's already happened. So look, we could look at the S&P 500 and say, oh, we're right at resistance. It hasn't broken out yet. When we take a look at other averages and other markets, they have already broken out, which tells me that the S&P is very likely to break out this week. So I'm more bullish now than I've been in a while. However, we have to talk about where we are. First off, you guys all know that Labor Day is Monday. Markets are going to be closed that day. But we always talk about these seasonality patterns at Maverick. We always are bringing them up. We talk about the January effect. We talk about the Santa Claus rally. We talk about election years, how they affect markets. Every year, right around this time, we're always talking about the worst 6 weeks of the year, typically from September 1st to October 15th. I've been talking about it now for the last 3 weeks, and 3 weeks ago I even said, I don't think it's going to be a bad period this year. Typically in election years, we don't get the big sell-off. That doesn't mean it's not going to happen this year, but if you take a look at seasonality patterns, which is just looking at the average returns, in election years, the market usually does pretty well. There's a lot of extra spending that goes in these 3 months of the year ahead of the election. I don't think we're going to see a sell-off this year. I could be wrong. I called it correctly for the last 3 years that there was going to be a sell-off. I don't think it happens this year. I think the market is looking really good and really poised to break higher. It is the first week of the month here, which means we get ISM. On Tuesday, we're going to get ISM. This has been below 50 for a while. Nobody has cared. Nobody's cared. JOLTS job openings. The Fed said we want these under 10 million. They've been under 10 million for a while. Even if this number pops up a bit, it doesn't matter. ISM Services PMI is probably the most important one that we've talked about so far. This has stayed above 50. This is 2/3 of the economy. And you can see it's supposed to be right around 51. It's not a strong number, but it's a decent number. And then on Friday, we get our jobs report. Jobs report looking for 164,000 jobs, a tick down in the employment rate, a little bit of a tick up in the average hourly earnings. If it comes out at these numbers, the market's going to be very happy. Remember, if it's too hot, they start to worry that the Fed isn't going to cut rates. If it's too cold, they start to worry that the economy is weaker than expected. This is the Goldilocks number. We want a number that's not too hot, not too cold. These estimates right here, if it comes in here, the market is going to be very, very happy with where the economy is at the moment. So looking at all of the information, looking at the charts, looking at where we are, looking at the moving average, looking at our scoring system, we're at a +2, and when we break out, it's going to go to a +3. We have seen this August rally. We've seen this sideways price action for the last 2 weeks. Typically, August are the worst months of the, I shouldn't say they're the worst month of the year, but they're usually the lowest volatility, lowest volume, and they just seem to just kind of drag on. And then after Labor Day, you get either a big move up or a big move down. I think we are moving into this period with a lot of momentum. We just based for 2 weeks at all-time highs or near all-time highs. I don't see any reason why this market does not break higher. So I've got a +2 for the week. And once we break out of This resistance on the SPX, we will definitely go to a +3 in these markets. Now look, the overall market has been, a fairly good indicator of where to be, but sectors. If you've been just following sectors, you have been killing it lately. So let's take a look at the sector returns for the week. Our favorite sectors last week, I said, were healthcare and financials. These were my top two. These were all +3s. However, we had 3 sectors that were +3. We had utilities, was a +3, real estate, healthcare, industrials, and financials. All of these were +3s. Take a look, they all did well. What were our weak sectors? Where our weakest sectors were consumer and technology. They struggled. Comm services was a +2, so that was one of the sectors that underperformed, but our materials was a +2 and it did just great. Following these sectors has absolutely made trading much, much easier. And here we have utilities. It's been a +3 for a while. It did not do anything different. Closed at new all-time highs, so utilities remains a +3. We had communication services at a +2, and you can see we got a lot of churning action. We've got a little bit of resistance from this candle back here. We are churning. It wasn't terrible. It just wasn't an up week. I don't see any reason why you should be bearish communication services, but it shouldn't be your favorite sector. It's because it's not the best. It's only a +2. We go to real estate. Real estate has been a +3 for a while. And check it out. We had a monster run last week. Just a monster run. And we got a really nice high base price action here. I don't see any reason why real estate doesn't continue to be an outperformer. Healthcare was my favorite last week. And you can see this kind of price action. I love rising bases. I mean, take a look at this. We had this monster rally. Most stocks will base sideways, or some will actually pull back and have a little rally. The strongest will do this rising base, just a rising base where every day it just creeps a little higher. It's tired, but it just creeps higher until finally people realize, hey, I'm not getting an opportunity for a pullback. I better get into this right now before it takes off without me. +3 all day long on healthcare. Industrials was a +3 last week, +3 this week. Close. Look at how strong this was. I mean, the days where the market was weak, this was sideways. The days it was strong, it was racing higher. And if you want to take a look at the best chart out here, like I said last week, financials and healthcare look great. Look at financials here. Monday was a doji, a gap up and held its gains. Every other day was a green candle. Every other day looked fantastic. This is no doubt a +3. I continue to like financials. Then we come over to the 2 sectors that have not had good scores. We've been very clear that consumer has been lagging. And take a look at that. We are nowhere even near new all-time highs. It's lagging. Now look, it's not going down. It's not terrible. It's just a +1. Last week, we had technology at a +1 and it actually deteriorated a little bit. This is the only sector this week that is getting a downgrade. It's technology. But look, let's talk about it. Here we have a pullback. We've got this doji pattern here. Look, we could easily go up. Here's the question though. I know people always look at this. And this is how I looked at it as a young trader. Oh my gosh, all these other sectors, they've run so much. They're so far out from their moving averages. Look at technology here. It's cheap. I'm going to get it at a discount. And when it runs, it's going to be great. Here's the problem. When you really look at it in real life, these don't run. The things, you could have made this premise a week ago, 2 weeks ago, and you would have been wrong. The things that are strong continue to stay strong. Technology will have its day again at some point in the future. It's just not now. Technology is a 0. Avoid it on the long side. I mean, take a look at here at materials. Materials look amazing. Now, materials was a +2 last week. I'm keeping it a +2 this week. It definitely could be a +3. I'm just waiting for these moving averages to give me one more week of steepening. But if someone said, Rob, I disagree with you, it's a +3, I will actually agree with you. +2, +3, doesn't really matter. And here we have energy. Last week it was a 0. We got a +1. If you want to leave it at a 0, fine. No problem with that. But, we are closing at a nice, high on the week. A nice gap down, close up, engulfing candle. So I gave it a +1. Not a lot of movement this week. We had 5 sectors that were all +3s. They all delivered. Every single one of them delivered this week. Materials and comm services at +2. Materials delivered, comm services did not. The only change we have this week is technology weakened a little bit and energy strengthened a little bit. Other than that, these are the sectors that are underperforming. It doesn't mean they're technically going lower or terrible. It just means they're not going higher. They're not participating in the rally. This is where you want to be long. This is where you want to be either short or sideways. Very, very easy to look at this chart and see where you want to be.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
Let's take a look at our trade slots. And you can see that we have been overwhelmingly bullish here. We got most of our trades on the bullish side. Out of the 12 trades, we've got 7 bulls, 3 sideways, 2 bears. And this week, the trades that rolled off this week were the financial trade, real estate trade, and the energy. So the financial trade was in MasterCard. That was a great trade, max gain. Our sideways trade in real estate was NLY. That was pretty close to a max gain. And then our energy trade was a break even. So nice week. We only had 3 trades roll off this week. But the question is, has anything changed? We still have a +2 in the markets. So we're going to stick with the +2 in these markets. That tells us this is our allocation. We can have 1 +3, we can have 4 +2s, 4 +1s. This is where we are. Right now we've got 1 +1 in healthcare. We've got 3 +3s. We only have 1, so I'm going to be adding 2 +2s this week. So I'm going to be adding a +2 in real estate and adding a +2 in financial. We've got 4 +1s working, and they're all working really nicely here. We've got a sideways in tech in Datadog, DDOG. We are going to be adding in a 0 on energy. I really wanted to find a materials I liked to put a bullish trade on, but I just couldn't find one, so I'll wait for next week to fill that slot. So really only 3 trades here. We've got a lot of trades on. We've got 12 trades on, only 3 rolled off. So let's go ahead and replace those trades. First off, real estate. Looking for something, again, I'm looking for a +2 trade. Real estate is a tricky sector. And we talked about this in the Trading Collective. Utilities and real estate, first off, there's not a lot of stocks available. When you sort out like low volume stocks and low volatility stocks, you really ended up with about 20 or 30 possible trades. And out of those 20 or 30 possible trades, a lot of them only have monthly options. I found lots and lots of very good setups in the real estate sector. And in fact, I found some great trades. And when I went to go look at the options just weren't there. They just weren't there. So things like Sabra, Healthcare, SBRA. I loved SBRA. It looked really good. Realty Income Corp looked really great. Things looked really good, but they just did not have good options available for them to where I could put together the right options trade. So I ended up finding this PLD. PLD is Prologis, and you can see it's a nice trade, very nice trade. We had a base pattern here for a while. We broke out, we pulled back. We had a 4 days of a pullback, just a beautiful confirmation candle here. Okay, so here we are at 125. There's only $5 strikes available. So the only trade we can really look at here is the 125, 130. Here's the problem. It's not as bullish as I wanted it to be, but I couldn't find anything else that really fit the bill. I couldn't find anything that was a pure +2, which is a 40 delta on my vertical spread. This one is basically a 50 delta. So I'm going to label this as a 1.5. Sadly, I couldn't find anything else I really liked. IRM was pretty close if you want to take a look at Iron Mountain, IRM. But this one to me, okay, it's not a +2, it's more of a 1.5, but it's a nice bullish trade. And you can see we're not asking for a lot on this, 125 up to 130. By September, it only had monthly options. So we're 3 weeks out. I think this one looks really solid here in the real estate sector. Moving on to financials. Financials looks so great. It looks absolutely so good. This is New Holdings, NU. There is no way I could have ever traded a stock like this in my first 5 years of trading. Why? Because I was a pessimist. I looked at something that fell from 13 down to 9 and then rebounded from 9 to 14. Do you have any idea that that is like a 60% run? There is no way I could have ever talked myself into buying something that had just run 60%. I have learned, I've grown since then, and now I know when something runs 60% and then this happens, it's telling me, oh, nobody wants to sell this. Anyone who bought it in here, they didn't turn into sellers over here. It just got a little tired. The buyers kind of ran out of juice, but the sellers didn't come in. Everyone's waiting for more. I have no idea what this volume candle is all about. I don't really care. I could look into the story, but I've learned to not care. Go off of price action. This thing's breaking out. This thing's breaking out nicely. If you need to fill a +1 slot, the September 13th, 14th, 15 bull call spread is giving you a nice return. That's, again, 60 delta trade, so you're going to be positive theta. I, however, am looking to fill a +2 slot, which means that I'm going to be right here. The 15-16 bull call spread all the way out to September 13th, so 2 weeks out on NU Holdings. And then the last sector is energy. Energy I'm doing a 0 trade on. So I went around and said, okay, what is a stock that hasn't really participated? Now, a lot of energy looks fairly sideways here because oil has been stuck in a certain range, and of course, that is the most important thing to the energy sector. This one has been pretty pinned here. Moving averages are flat, flip-flopping on top of each other. If we take a look at where is the top of the range here and the bottom of the range here, we've got 120 up to 135. So that's really the range here on this. The question is, where's our midpoint? Whenever you do a butterfly and a 0 trade, butterfly or a condor, you're always taking a look at, okay, if I'm going to be 2 weeks out, which is what I'm going to do on this one, 2 weeks out, where do I think this is the most likely to be in 2 weeks? My call is that the market is higher than it is today in 2 weeks. So if the market's higher, I believe that it's going to drag most stocks higher over the next 2 weeks. But I believe the energy sector is one of those sectors that's not really going to participate as much in the updraft. I'm very happy to take a look at this 130. Now look, there's dollar strikes. You could take a look at the 131, the 132. You could take a look at all of them, but I'm taking a look at the 130. I'm going to be taking a look at the 125, 130, 135. So basically I'm going to have a profit window right about in here. So this is going to be slightly bullish. It's going to be a slightly bullish trade. I'm going to call it a plus 0.5. We're looking for a zero trade, so just a plus 0.5. This is a sideways trade though, thinking that it's not going to break out, not going to break down. We're going to make some money off of the fact that it's not going anywhere. I've only got 3 trades for you this week. It's because we didn't have a lot of slots open up. We're already leaning heavily bullish. I'm going to add on to that a little bit this week. I'm guessing next week you're going to see me pare that back. I think we have 5 trades rolling off next week. Those 5 trades rolling off, I'm going to pare back some of my bullishness. So whenever you do a slot system like this, basket trading system, I'm now leaning very bullish. If the market does not go up next week, and let's say the market pulls back 2 to 3%, it is going to be painful. And I understand that. And I've kept my risk small per position. I get that. But this is how trading goes. There are times during the year where you feel more confident than others. I really like the setup here. Like I said, I'm the most bullish I've been in a couple months. This looks really good for the setup. Even though we're going into September 1st to October 15th, where the last 3 years I've been very negative. I'm not this year. I think this thing looks really good. But, as always, if I'm wrong, I have my position sizing, I've got some hedges working, and yes, it's going to be a little painful, but I will survive it. Wrapping this up, remember, markets are closed Monday for the Labor Day holiday. Personally, I think we're poised for a breakout, and I understand we are going into a situation or a seasonality pattern where you typically wouldn't be bullish. Over the past 3 years, I've been very bearish going into September's. I'm just not this year. I'm just not. Election years tend to be the outlier, tend to be different. However, if it ends up being terrible, I will change my mind. I'll absolutely change my mind. And if we break it back below the 20-day moving average, below the 50, I'll go short. Look, I have no ego anymore. After 27 years, it has completely beaten me out of it. I just want to be on the right side of the market. Follow the market. The market will tell you where to be, and right now it's telling you to be long. It's just flat out telling you to be long. If it's wrong, you'll take a loss. But you'll be able to make adjustments, and as long as you're not too overextended, you'll be fine. All right, I think I've made my point on that. Wrapping this up, 11th Annual Maverick Fantasy Football Tournament. If you have not joined yet and you want to play fantasy football, we sent out the links, I believe, on Thursday. I don't think all the leagues are full, but they're getting pretty close to full. If we do run out of leagues, we'll open up some new ones, but for right now, we are not full. The draft is on Tuesday night. If you don't join by Tuesday night, it is locked out. It is locked out, and that is simply the way fantasy football works. I'm going to be sending out one more email probably Monday night, reminding everyone, and then after that, we're going to have a fun time of fantasy football. Remember, we do 2 fun things here at Maverick. We do fantasy football, and we do March Madness. Those are always fun little tournaments throughout the year. Have a great weekend, everyone. Happy Labor Day. Be safe out there, and happy trading, everyone. Goodbye.